Just looking at some of the Rich Habits training program, I will form good daily habits and follow these good habits each and every day. I will engage in self-improvement. I will devote part of each day to caring for my health. I will save 10% of my gross income. I will control my thoughts and emotions. How can you control your thoughts and emotions every day? Well, do you follow your own advice?
I do, Larry. I listen. I come from an Irish Catholic family. We had 11 in our family, and anger was the primary emotion. So I learned to control my anger, and when I talk to the young kids about the Rich Habits, I tell them, look, anger is the most costly emotion that you have, because it's going to cost you relationships.
Takes a lot out of you.
It's draining physically. You don't think clearly, and you're not responding accurately to the situation, whatever you're in. So you want to develop strong relationships in life. Wealthy people know that if they're going to, relationships are the currency of the wealthy. They control their anger. They don't want their customers, their clients, their business partners to be nervous to be around them and work with them. So anger is one of the emotions that the wealthy really go out on a limb to try and control.
Yeah, here's something you got to be interested in. The habits, example one, what you eat every day. Now this is amazing. 70% of wealthy and eat less than 300 junk food calories per day. 97% of poor people eat more than 300 junk food calories per day. Working out, 76% of wealthy exercise aerobically. 23% of poor exercise aerobically 4 days a week. Not bad. And TV viewing. Oh, they're not going to like this one. 67% of wealthy watch 1 hour or less of TV every day. 25% of the other income watch 1 hour or less of TV every day. Early to rise, 44% of wealthy wake up 3 hours before work starts. 3% poor wake up 3 hours before work starts. So, basically, I can understand why you got some critique about this book, because it is somewhat a bit of labeling, but this is true, right? How did you find all these stats?
Well, I spent 5 years studying 233 wealthy people and 128 poor people. I have over 200 activities that I tracked, and then I separated the activities into two groups, and then I compared the two groups, and then I came up with this difference that I think is the size of the Grand Canyon. It's really a vast difference between how the wealthy live their lives on a daily basis and the poor do.
But the poor may be happier.
Well, one of the things Larry, that's a great point. Unfortunately, you're wrong. One of the stats I tracked was are you happy? And the wealthy were by far happier because they had fewer financial issues. They had fewer relationship problems. In fact, their relationships were stronger. And their marriages were stronger. That's another thing that I tracked. So the wealthy people were by far happier. The ones that were really miserable were the poor, because they had all of these issues that they had to contend with. The stress associated with those issues made them just miserable and unhappy.
Now, when you meet someone, Brennan, who's wanting to be more affluent, maybe they're 30 or 40. I assume most of your customers are a little older.
Yes.
All right, but wanting to be more affluent. Wouldn't it be great to target kids who are not making a lot of money, maybe they're 25 or 30, and start saying to them, I want you as a client in 10 or 15 years from now. Maybe that's the way to start it, because I want to tell you something. If I was 20 again, there's a lot that I would do differently.
I think that's what a lot of folks would do, and I think that's one of the main things is to start early. The more financial education that we have at a younger age, the better off we're going to be in that 30 to 40 year range when it's about time to come find someone like me to help you out with the next step in your financial future.
Now, when you look at the media today, we are besieged. You've got CNBC, you've got Bloomberg, you've got Reuters, you've got everything, Wall Street Journal. I mean, if you go online every day and look at all these websites, you are besieged, and then you get these headlines. So-and-so, big multi-million-dollar advisor thinks that this is going to happen, or that's going to happen, or this stock is hot. And they're very wrong a lot of the time. So our headlines, it's important to get beyond the headlines, isn't it?
It is important to get beyond the headlines. I think that's, first of all, that's why it's beneficial, if you don't know what you're talking about yourself, to go find a professional financial advisor, financial planner who can help guide you to kind of tune out some of the noise that you're seeing on a daily basis from the CNBCs, from the Bloombergs. But two, also have just a little bit of conviction with what you're doing yourself. Have a little confidence in yourself that you actually did a little bit of the homework, that you've done your work, that you have your financial plan, and that you can stick to it, and that it's going to be a good plan.
Now, in terms of the concept of big time investors like Icon, or ICANN, depending on what you want to call him. I did have a chat with him one day. Somebody had asked me to talk to him about something, and I found him to be very sure-footed. I'll be nice, okay? Or you look at this person who believes in this industry or that industry, and they say, oh, gas drilling's great, gas drilling's off. Is it better for any individual, regardless of their income level, whether it's at a local bank, to get some sort of expertise in their life and to make sure they're very scrupulous in finding those people?
I think it's important to get expertise to develop a plan. I look at, focus on the long term, don't let emotions get involved in, specifically when I was trading currency on a very short term basis. If emotions are getting into your trading decisions, you got to get out of that position and move on. In terms of getting financial advice, yeah, I think it's very important. But again, it comes down to, I think, risk tolerance. How much risk are you willing to take? And base your portfolio on that risk tolerance. Diversification, getting involved in mutual funds instead of individual stocks will be less risky because it's diversified.
So the old concept of more flowers in the garden is real.
Absolutely. I mean, one of the old-fashioned saying is, best way to be rich, buy one stock and be right.
Well,
best way to be poor, buy one stock and be wrong. Right? So there's a reason why we have some of these old sayings. Diversify your assets. Don't put all your eggs in one basket. We can probably come up with a number of different things to say that way, but that does hold true.
Well, it's kind of interesting to me that during the height of the stock market boom and this one, you meet friends and they'll say, gold. It's gold, all right? Or it's silver, or it's platinum, or it's it's foreign funds, it's domestic funds, definitely options. Everybody's got their point. And everybody seems to have a story. How much, in your opinion, we'll start with you, does ego play a role in some people's let me put it this way. If you're doing the wrong thing, ego is not a good thing for you to have. It sort of blinds you, doesn't it? Yeah,
it gets in the way of doing the financial planning, that's for sure. And one of the things that I've come up with this cute little catchphrase that I use with clients, and I ask them, are you a wolf in sheep's clothing, or you were sheep in wolf's clothing? And this is the risk tolerance thing. But what we found out in 2008 were there were a lot of sheep in wolf's clothing. And what I mean by that is when the market starts to tank, they rip off their outer aggressive investment image, and they're sheep underneath it, and they're selling everything. And that's something that a good advisor will really identify with their client. They'll say, look, you know what, you really are a conservative, investment-minded person. We have, in my firm, we do this risk tolerance questionnaire that they have to complete. And then it eliminates all the doubt when you have that piece of paper that they completed saying, oh, I am conservative.
Just quickly, I think that in your case, where you're talking to high school students, nobody ever does that. You may be starting a national trend here.
Well, they all want to take on the most risk possible.
Of course, because
stock
they're
market
18 years
game, and just like you were saying, one stock, I'm going to be in first place.
Yeah, but that's not the way to do it over the long term.
Over the long term, you have to be diversified, and again, as you grow older, your risk tolerance has to change. I tell all my students, the advantage of being young is you can take risks. You don't have the responsibility. You don't have the mortgage payment. You don't have the worrying about the kids' college education.
Right.
That now is the time to take risk, and that's in finance as well as other things in life. If you take risk, taking an AP course, well then what comes with that risk is reward. If you're going to take the risk, demand the reward for it.
Brennan, you played basketball in college, and you know that you can't win a game without defense. And no matter how offensively good you are, some people prefer in times of uncertainty to take a defensive position, to be careful. If somebody comes to you and says, Brennan, I'm a little nervous, and they say it more than once, you're going to change their portfolio, aren't you?
You're going to absolutely listen to them. We do say very similar. We do a risk tolerance to find out exactly how much you can lose or how much you are comfortable losing before your emotions take over and say, no, I don't want to be in that.
Yeah.
Go ahead.
No, go finish up.
No, that you are going to be able to be to stick with the program, because I think that's the most important part. Everybody can take risk, but you have to be able to stick with it.
Brennan Lothery, financial advisor with the Wealth Management Group. Tom Corley, great book. Can't wait to read all of it. And Kurt Balderson, who gave up Wall Street for the young people. And I think that you may be writing a book about those experiences. Good night, everybody, and thanks for being with us.